What's up, Louis? It's Guys here. Hope you're doing great. A question I get asked so often is, can you buy property with a bad credit score? Investing in property can be a very profitable asset when done correctly, and the easiest way to get started with property is to simply borrow money from a bank. The issue is that many South Africans struggle with bad credit score, and at the end of the day, they do not qualify for a large enough loan from a bank, or they don't qualify at all. So the first thing that I feel obligated to say before we continue into the actual solution if you have a bad credit score is that, building a good credit score is really not that difficult. I personally feel, and of course this is just my opinion, that if you can't build a good credit score, maybe you should not focus on investing in property, but focus on your personal finance and your budgeting first. Unfortunately, this is not stuff that we get taught in school, and the schools focus on stuff that's not really relevant in the real world. So I like to preach or teach that you should focus on your credit score from a young age, and I made a couple different videos that you can go and rewatch if you want to improve your credit score. And just hear me out for a second. I think that if you struggle with your credit score, you might not be in the right place in your life at the moment to invest in property or risk assets. Just remember, something as simple as building a credit score is really important, but if you struggle with building credit, it's going to be really risky to invest in a risk asset that has a lot of money involved, and it can effectively ruin your financial future if you do not take the right steps to mitigate the risks. With that out of the way, the long answer is yes, it is possible to buy property with a bad credit score. The issue is it's just much more difficult, and it takes a certain set of skills to achieve this goal. You will need to find really profitable deals to present to potential lenders. You need to understand the numbers, understand the structures, be able to network with professionals, know how to set up the structure with your private lender, and so much more things that you need to understand. So if this is something that you want to do, I am going to share a few details on structuring deals with a private lender. Think of a private lender as a oom or a tannie or a friend or a business partner, or basically anyone that is willing to borrow money to you to invest in a profitable property deal. If you want to follow the route of a private lender, there's three main things that you need to understand. The first thing is the loan term that you will have to discuss with your lender. So like a bank, you get a loan over a certain period of time in which you need to pay back your lender. Most of the time, the banks will lend you money from 20 to 30 years, but with a private lender, it's going to be a much shorter term. The terms will be short to medium and would maybe look something like 6 months or anything up until 5 years. This is one of the key points that you need to discuss with your investor. And then of course, the second very important part of the equation is the interest rate. Again, like with a bank, you need to pay them back with interest. So obviously a bank will probably charge you prime rate, or sometimes prime rate plus 0.5 or even minus 0.5, for example. A private lender will not charge you this amount of interest. They will have to charge you a much higher interest rate to make this whole deal worth it. They would probably charge you anything from 12% up until 25%. It really all depends on the specific person or the specific lender, and of course the specific deal. Then the third thing you need to focus on is the loan to value. Understanding the loan to value is knowing whether your private lender will be able to lend you the entire value of the loan, which would be 100%. So if they can borrow you the entire loan to value, which would be 1 million rand or 100%, it means you only have to work with this one investor. But maybe one private investor just doesn't have enough money and they can only borrow you 500,000 rand. That gives you a loan to value of 50%, and you will effectively have to search for another lender to borrow the outstanding 50%. So these three things is really important, and you effectively structure your deal around these three things. Then we get to another three important points that we need to talk about. And the first thing is going to be risk mitigation or exit strategies. If you want to borrow money from a private lender, whether it's a friend or a family member, you need to be able to prove to them that no matter what, there is some sort of way to exit this deal without losing all of your money. We need to understand that borrowing money from your friends or family can still be very risky, and unfortunately, the deal can fail and you can actually lose money. So you need to be able to provide some sort of surety to your investor in the case of an emergency. So let's say, for example, you are willing to sign surety in your personal name for the debt that they borrow you, so that the investor know there is a way for them to get back the investment amount. This can be structured in a few different ways, and I would definitely advise working with a professional attorney that can help you set up this part of the deal. Having a really good contract at the end of the day is going to be vital to succeeding in the private lending game. The next thing you need to focus on is the deal's ability to repay the debt to the lender. Let's say you want to buy a single let property that you want to rent out to a family, and it's an average deal that you want to borrow money for to rent it out, but it does not create cash flow on a monthly basis. So how will you be able to repay your lender if you can't create enough cash flow to withstand the higher interest rate repayments that you need to make with your private lender? So you need to stress test your deal to make sure that it has the ability to repay the loan to your investor to mitigate the overall risk. This is a no-brainer, and I'm sure that no investor will borrow you money if they see that the deal that you are presenting is a shitty deal. Then the third thing is, how will you actually structure the deal? The structuring is very important, and this can kind of make or break the deal at the end of the day. And there's a few ways that you can structure your deal. This is probably the most common way, and how I would approach private lending is to simply work with one private lender. This means you have a form of loan agreement with one investor stating all the terms and all the details about the specific property so that it is beneficial for both parties. You can effectively think of it as a smaller bank, like I mentioned before. This is simply someone that borrows you money over a certain period of time with interest that you obviously need to pay them back. And this is probably the most common way that people will approach this strategy. A partnership can also be structured in a few different ways, but most of the time it's two people with their own type of skill set. Let's say, for example, the first person has the money, but they don't have the time or the skills, and the second person has the skills, but they don't have the money. These two people can come together and form a partnership to buy a specific type of property and share the profit and losses 50-50. This can be a very tricky way to approach this strategy because people ultimately change when you involve money. So if you try to follow the partnership route, make sure that you have really good attorneys that can help you with the contracts. The last part of this private lender setup is understanding the repayment terms. You need to decide how will you be able to actually pay back the lender using the money from your deal. One of the most common ways is known as an interest-only loan. Let's say, for example, someone borrows you R1 million and charge you a 15% interest for a term of 1 year. You need to pay them back the interest only on a monthly basis, which will be 12,500, 12,500, 12,500 every month until you reach the end of the term, where you will need to pay them the entire capital amount, which would be R1 million. Probably one of the most common ways is a interest and capital repayment. This is where you pay them back the interest portion as well as the capital, and this is similar to the system the bank uses. So you will pay them the capital repayment plus interest on a monthly basis every month until you reach the end of the term. Then another way which is really beneficial for the investor is a no interest and no capital payment and settle the debt at the end of the term. So let's say again it's a 1-year loan for R1,000,000 with an interest rate of 15%. You pay them R0 every month until the end of the term, and at the end of the term you pay them the entire capital amount plus interest. These are some of the most common things that you need to understand if you are considering using a private lender. At the end of the day, you need to do your research. You have to have a certain set of skills to successfully achieve this sort of strategy. And remember, once you want to approach an investor, you need to do a proper proposal so that they know exactly what they are in for, what are the risks, what are the rewards, what can they expect, and why would they consider you. Feel free to let me know if you have any questions. If you have something to add to this video, feel free to leave a comment down below, and I hope you guys enjoyed this video.